Good evening. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is Trade with Travis Live. This is the first time that we're actually doing it on YouTube. Typically, we end up doing this on Facebook. We typically end up doing from 8:30 to 9 a.m. This is the first time that I've actually had a chance to be able to go through and actually do it through YouTube. So for the people that are actually hopping in on the stream, being able to look at it, if you're new or anything else like that, one, this is my first time being on here, so don't necessarily expect that many people to be able to show up. But if you do, one, thanks for hopping on. And what we're going to end up doing is we're going to end up taking a look at some major pairs and see if there's some opportunity out there to be able to see if we can be able to get in. This is an interactive session to be able to help you earn while you actually learn. And what I'm going to end up doing is actually placing it in a couple websites so you can be able to take a look at some of the information that we end up doing. But before we end up getting started, one, please make sure that you end up writing down and tell me if my sound is good for the people that are out there that may be listening or watching at this particular point in time. And write down your name and tell me where you're from if you're actually hopping in just from just out of nowhere, because quite frankly, this is the first time that we're actually going through and doing it on this page. Make sure that you click on subscribe when you end up going in if you like the information based off of everything that you end up hearing, and make sure that you end up turning on the notifications, because my plan is to be able to do this around 9 or 10 o'clock within the session. So we're going to do this for about 30 minutes, and then after that, we're going to hop into it. I'm going to go through the disclaimer real quick. I'm not a CPA, which means that I'm not going to tell you whether to buy or to sell. What I'm going to do is basically teach you education, and from that education, you can be able to make your own informed decision. Now, based off of that informed decision, understand that when you end up trading, it involves risk, and that is the risk of being able to make money. That's the risk to be able to lose money when Forex trading. So understand that that happens. Now, understand that past performance is not indicative of future results, and always trade in a position to where you know that you're trading safely, but you know that you're trading at your own risk. So what I'm going to end up doing is actually showing my face. My name is Travis Witherspoon. This is Trade with Travis. I'm very happy to be able to speak to each and every one of y'all that are actually online, for the people that are hopping in, for the people that may end up seeing this out of the blue. My plan is to be able to do this, hopefully be able to simulcast this with my Facebook page, which is Carter Cow Capital, or you can be able to hop into the Carter Cow Academy and be able to get this at in the U.S. sessions, which is going to end up being at 8:30 to 9 a.m. and we actually end up going through those sessions. So where are we at right now? What is our way of overall trading? I'm going to kind of explain that while we actually end up going through. What I actually do is I'm pretty much more of a swing trader, but I do look for scalping opportunities, and we kind of have a order of operations by the way that we trade. We're going to look at the U.S. based pairs for today, and then as we go along and be able to do this, if there's people that want to look at some pairs that are outside the U.S. based currency, then we will do that. We will go by and take a look at those examples. So the first thing that we're going to end up doing is that we're going to end up always hopping into the economic calendar to be able to always see what's going on with the overall fundamental news, so we can be able to understand what that is, and then after that we can use that to kind of help us out with our overall technical analysis from this overall standpoint. So right now we're looking at the Australian dollar, United States dollar extends a correction from a 5-week top near 6,400. I'm very excited to be able to look at that pair. We'll kind of hop into that one a little bit probably early, because that's one of the pairs that's actually being traded heavy during this time. We will look at the US yen, and we'll look at the Euro US, look at the New Zealand dollar, US dollar, and everything else like that. But for today, the only news that is still out there is the Australian Westpac consumer confidence that's coming out today. Let's see. We can do it by this week. So the New Zealand dollar is basically end up getting good news from that food price index, but obviously with everything that's going on with the coronavirus, everybody's basically having negative news. So basically what's happening is we're trying to figure out which one is going to end up having a lesser of the negative news, and which one is going to give us the best opportunity to be able to get in. So going on tomorrow, what we're going to end up seeing is retail sales from the United States dollar. Obviously, I expect that's going to end up being a negative number, which will affect the U.S. dollar for that movement. And we're going to end up seeing the Bank of Canada with their overall rate statement. And we will look at some currency pairs that correlate with that. And we will look at the U.S. Canadian dollar, this in general, to kind of figure out where we're going with that. So that's where we're at for today's information. Let's go ahead and go through and let's take a look at the charts. I always look at U.S. dollar or the U.S. dollar index first. Then after that, I look at oil. Then after that, I end up looking at gold. The reason why I look at those three is because they are very high correlations between the U.S. dollar with the U.S. dollar index. U.S. oil is very correlated with the Canadian dollar. And then when you look at gold, that kind of correlates very well with the Japanese yen. So when I look at those three pairs, it kind of gives me an idea before I even look at any other chart on what is probably going to be a better situation for being able to trade. Currently, as we speak, we're looking at this overall position. I am in 3 Japanese yen trades and 1 U.S. Swiss franc trade where I'm up currently 348 pips respectively, and I'll show you what that position is going for the short term. We should be close to being able to hit that overall extension for its movement. So with that being said, let's go ahead and look at the U.S. dollar and kind of get an idea for what's that. So with the U.S. dollar, the market basically end up hitting a D extension at 12,954. And what we're looking at this particular point in time, we're seeing that the market is basically retracing. There's a weekly 382. Or basically a safe haven position that's at 12,401, and we're expecting for the market to be able to retrace towards that area. I'm going to take myself off the screen real quick. So we're expecting for the market to be able to hit that weekly 382, and then after that, give us a chance to be able to bounce up. As we notice, we can see that the dollar index is basically in the buy zone, which means that there's going to end up being potential buyers that's going to end up getting into the market, especially tomorrow with retail sales and everything else going from there. But I don't expect that tomorrow is going to end up being the day that's going to end up pushing the dollar up. Obviously, with us getting with us getting these census checks and everything else that's going to end up coming out, that may end up putting a little bit of an influx in the market and a jolt in the market that allow us to be able to go through this overall swing and be able to push up towards our D extension, which is at 13,464. So at this particular point right now, for any U.S. dollar pair, I'm still looking at being able to sell until the market ends up hitting this weekly 382. We know it's in the buy zone. We know that there's going to end up being buyers that's going to end up coming in. But currently at this particular point, I'm still kind of okay with selling on the dollar and being patient and allow the market to be able to move on a weak side when it comes down to the dollar. But I do expect that the dollar is going to end up pushing up because it is a safe haven. So with that being said, let's go ahead and go to oil. Remember, oil kind of correlates very well with the Canadian dollar. We're looking at this movement. We can see that the market has been making a downswing. It's expected for the market to be able to move down to 14.19 for its overall position. With that being said, we can see that the market has broken the counter trend line break and is starting to push. It's in the push zone and it's starting to push toward that $14 a barrel type of move. Now, if you was a part of any one of my other courses or any of my other classes, we end up seeing that the market actually end up pushing up to $28. I thought that was going to end up. I thought that was really kind of just a facade type of movement, because obviously if everybody is in lockdown and people have to remain in their homes because they're trying to stay away from this overall virus, then who is going to end up paying for that amount, or where's that demand going to end up coming in for the supply that was basically put out for us, the number? So we quickly seen that the market basically ended up moving down back to 20. Once again, it's expected to go to 14.19. So that means that we should be able to look at some of the pairs with the Canadian dollar to see if there's any type of weakness in being able to get in. Now, I will caution you, remember, we have the Bank of Canada rate statement that's going to end up coming out tomorrow. So I would kind of stay away from that overall movement, at least until after the news comes out. But there's still an opportunity of being able to say that may be a chance to be able to get in. So the U.S. dollar is down, oil is down. So the U.S. Canadian dollar, I'm going to, quite frankly, there's no reason for us to be able to look at it for us being able to get in, just because right now at this particular position, I don't think we're going to end up seeing any decisive winner when it comes down to that. So moving on to oil. I'm sorry, moving on to gold. Remember, gold is kind of is really kind of set up to where it works with the U.S. Works with the Japanese yen. So if we look at it from a daily perspective, what ended up happening earlier this morning, we end up seeing that the market actually ended up breaking a bearish crown or breaking a movement towards the downside that was expected. The U.S. dollar was going to end up getting strong. And I'm going to draw that out real quick so everybody can be able to see what happened. We end up having this market make this left leg right here. Um, then after that, end up breaking down and making this low. From this low, it ended up going up and creating this move where you have your center tip and you have this lower leg right here that end up going down and breaking the A of the lower move. Then from there, we end up having the market basically make a high, and then after that, it started to move down and make a low. So what was expected was that we're going to end up seeing this movement kind of break down from this and make a new lower low. But what ended up happening over the course of the last few days, the market actually ended up breaking past 1703, and the market has pushed up, and it's expected to be able to go up to 1759 to complete this overall de-extension from this lower leg movement that actually ended up happening. So with that being said, this sequence has broken, and now we should expect that the Japanese yen should get stronger as this market is actually moving up. Now, one thing that I end up noticing right now is the market is basically in a sell zone position, which means that the market is overbought. So, for the people that are actually watching this video, or the people that will be watching this video, I will say that the Japanese yen is probably going to end up starting to be a little bit more stagnant just based off of its overall movement. But that should give us a chance to be able to get out of the market, a lot of market to be able to retrace a little bit. That means that the U.S. dollar is going to get a little bit stronger. And then after that, be able to find another position at a high price and be able to get into that position. So with that being said, if you like all the information that I'm talking about right now, I'm going to pause real quick and I'm going to say, hey, go ahead and take the time to be able to go to cartercowcapital.com/start here. Be able to learn some of the stuff that we end up doing. Most of the stuff that we're going to talk about right now on the classes that we're pushing is our Fibonacci Fundamentals course. If you want to go through it, click in your email address, first name, last name, phone number, which session you're available for. We have some times, and then after that, which session that you're interested in. In this case, click on Fibonacci Fundamentals and then click on Join the Session, and then you can be able to hop in from there. So going back to the chart. With that being said, let's focus in on some of the pairs on the daily. That kind of get an example about what's going on. I'm going to go through them all briefly. Some positions look better than others, and then after that, we'll end up going from there. I'm going to start off with the U.S. yen just because that's the first one that ended up popping up. So the market was going through the market was going through a upswing. What ended up happening was that when we first got the news about the coronavirus and that whole spike that ended up happening, we can see that the market basically ended up breaking down and going all the way down to 180 as its overall move. Now that broke the upswing of this move, and we quickly seen that the market ended up rallying back from there. Now, what this ended up doing was basically end up creating the right tip or the right leg of this movement, meaning that we had a chance to be able to get a high price to be able to sell. The first time that we ended up selling this as a group with our Carter Cow Academy, we actually ended up selling it right here at this tip, right above 111. I think we ended up getting it at 110.92 in our first position on our first sale, and then after that, we ended up selling it for about 300 pips. And basically combined our overall gains on that one while the market ended up moving down. But at this particular point, what we're looking at is this. We end up getting in when the market actually ended up breaking a counter trend line break. And we end up saying that there's going to be two things that could happen. We said, one, the market can break this trend line and could move up toward the upside and go up towards 112.25 and keep on moving towards the upside. And obviously that did not happen. We can see that the market actually ended up breaking a trend line, and right now it's moving right around this 107 area. And 107 has been an area where it's found support a couple times. And we're just trying to see what's going to end up happening for us this movement. If it breaks below 107, then it's going to end up having a lot of room to go down to 105 because really 106 is not an area up being able to have any type of pivot. So we should be able to see that the market should go to 105 as its overall position and be able to go down. Now, What does that mean for our position that we're in right now? Because we end up getting into this at 108, we actually end up getting in this at 108 on the 2 hour chart. And I'm getting ready to show you in a second while we're actually moving from there. Um, so we actually end up getting into this on the 2 hour chart at 108.73, and we end up getting into this at 108.88 and 107.70 for our overall positions. Now, the reason why we end up getting into those positions and being able to do that was because of what we end up doing for our overall trading metrics, which we call our 5-star setup. Now, in our 5-star setup, what we end up doing is that we end up placing in all of our information on the checklist and be able to see if we're in a great position to be able to get in. When we end up looking at this trade, our weekly, monthly, and daily direction were basically aligned, so we basically end up getting into that. It fell into our ranking system under our R2. You want to be able to learn a little bit more information about that. Obviously, just go to cartercowcapital.com/start here to be able to learn that information. Our risk was 110 pips, and we're going out to 213 pips. Now, it said that we should not enter the trade based off of this one. I ended up making a subjective answer to be able to say, let's take it, because we knew that this was the first move of a 990 pip swing toward the downside. When we got it, we caught it on the counter trend line break, and with that information, we end up seeing that we had an opportunity on our first trade to be able to make 6% on our overall gain for being able to go down. Now, what we end up doing here is that we like to be able to compound our trades. And what I mean by compounding our trade is that we want to be able to focus in on trades that's going to give us the best percentage to be able to win and be able to give us a greater amount on overall gain instead of focusing in on a lot of pairs and just jumping into them. So on this trade, we end up getting in at 23% of this move, 38% of this move, and at 60% of this move, which gives us an estimated growth of $375. Just on this pair, you had a $1,000 account. And the best part about it is you're looking at a 35% gain compared to a 6% gain with 594 pips compared to the 213 pips of being able to get in. The probability of success on this one was a 69%. 69% success rate on being able to trade that. That's what gave us the okay to be able to do that and be able to go down and take that trade. Once again, if you're interested in being able to learn a little bit more information about that, click on subscribe, click on learn that information, hop in and be able to go from there. So currently, as we speak, the market is about 40 pips from our overall movement. Obviously, if I was to go to sleep right now and see where the market basically ends up going up, as long as it does not break this purple line towards the upside, I'm pretty comfortable in the way that it's moving because it's in a push zone and that we basically end up putting all of our positions into a winning position. So with this being patient, we're allowing the market to be able to move and be able to one bask in the profits if we can be able to get that. So that's pretty much it for this one. Is there a chance to be able to get in on this trade right now? No, because it's in a push zone, but we'll take a look at some other pairs and see if we can be able to get into it. US Swiss franc, we actually end up getting into this one based off of the weekly and looking at it to be able to see if we can be able to get in on this one. I'm going to go based off of the trade parameters and show you again why we end up taking this trade. There should be some more opportunity that's coming up. This has an 88% success rate or probability of success on being able to move down. Our total pips risk when we end up taking it was at 195 pips, and we're going out to 393 pips for its overall movement. So once again, our ratio is not telling us to enter the trade because typically what we like to do is go after something that has a 1 to 2.3 risk reward ratio, but there was other factors that end up working out on this trade. If you look at it, it had a alignment between monthly, weekly, and daily. It was in an R2 type of movement. It actually ended up breaking a stochastic RSI movement. No, it didn't. Let me make sure I said, yeah, it did. When we end up taking this trade, yeah, it did. Okay, so I'm sorry, that's my dog. When we end up taking this trade ended up having a stochastic overbought or oversold signal. Let's go back. Oh, okay. Sorry, I had it right the first time. No, it didn't. Okay, so it did not have a stochastic overbought oversold signal, but what it did was it did have a counter trend line break for the overall movement, and that was one of the factors of us being able to take this. So in looking at that, there we go. So in looking at that, as soon as it ended up breaking that trend line, we was looking at being able to get in on that first candlestick when it gave us that entry. But if you notice, it was not in a overbought or oversold area, but we was okay with being able to take that. Now we're looking at being able to add on to this trade, but currently as we speak, we can see that the daily is basically getting into a over sold area, so that may end up showing that we may end up having a little bit more push up, and it may getting away from us to be able to give us a little bit more value for us being able to get into this trade. So that's one of the things just looking at for us what may end up happening with this. There's a lot of alignment for the downside, but just making sure and being able to get into this trade, we just want to be able to get it at the best value as we possibly could. So let's take a look at the 2 hour. Let's see if there's any type of position on the 2 hour. I still believe. If we look at the 2 hour, we can still see that the market is basically in the buy zone. So this is what I would end up suggesting. If we're looking at it right now, the market is in consolidation, obviously, because there's going to be high impact news that's going to end up coming out. So I would wait for the market to be able to push up. Once the market ends up pushing up, then I would look for a counter trend line break for it to be able to fall down. Hopefully it stays within that first initial trade, and then after that starts to move down and away from there. If it gives us a higher price to be able to get in, we can be able to look to sell at a higher price and then allow the market to be able to wave down with 2 and 3 different trades in that position with our stop loss being intact. Right now, stop is at 98.50, which is that second wave of this overall Fibonacci extension. Okay, so that's pretty much it for that position. Let's take a look at the Australian dollar, United States dollar. I'm very interested in being able to look at what's going on with that. I'm going to show it to you from a weekly perspective first, and I'm going to talk through what has happened. And then after that, we will go ahead and jump into being able to get in and see if there's a position to be able to get in. So on a weekly, what we end up having this large movement and this large swing down in the market that hit all the way down at 55.08. From there, on the weekly chart, for the last 4 weeks, the market has basically ended up pushing up from that movement, and we can see that the market is starting to push up, and it's starting to affect right here at this purple trend line where this is hit right here, that is hit right there, and we're starting to see that it's being affected right there. The 382 on this movement is at 60. I have 65.21. So that means that the weekly 382 has not been hit. So the market is still unhealthy right now, currently at that particular point. But once it ends up getting towards that area, I would look at being able to sell. Now, currently we can see that it's interacting with this trend line, but it has not broken this trend line or has not gave a movement towards the downside to show that the market is going to end up being bearish. Long term, we can see that the market is going to end up being bearish, which means that we should be looking for a high position to be able to get in for as a trade. But currently, right now, we're not in the market to be able to get in for being able to sell down in that position. So just be patient. Just wait. We should be able to get something on a daily chart. If we look at the daily chart, we can see that the daily chart is extremely overbought. I'm getting ready to show it to you right now. And I have some actual trade plans that are kind of written out that I'm interested in being able to look at. There's one at 60. If you're looking at the 618 of this overall position, that is. Let me move this out the way. That is at 64.92 for this overall position. But what we've already done figured out is that we know basically at 6,500. If I go back and let's take a look at the weekly again so I can make sure I give an accurate number. We know that the weekly 382 is at 65.21. So if the weekly 382 is at 65.21 and on a weekly chart, we can see that the market is basically moving up from the buy zone to the sell zone, then there's probably more expected room for the market to be able to keep on pushing up than it is that the market is just going to end up falling down. Now, obviously, I don't think that we're going to end up seeing a great news from the U.S. dollar tomorrow. With that being said, that means that we can be a little bit more patient and allow the market to keep on giving us a high price, right? Eliminating our risk and basically capitalizing on our gain. and we can be able to get in from there. So we're saying 65.21 is a potential position where we would like to be able to get into. And I'm going to put this in this color. Nah, let's see. I'm going to put it in. I'm going to put it in orange. Okay, so we're looking at that position as a potential spot to be able to get in. But currently, right now, we're not there yet. Even though the stochastic is really oversold, we're trying to get it at the highest price that we actually can be able to get it at. So that means that it'll probably end up reacting with this overall trend line. It probably might pop to the upside just slightly, and then after that, we can see that the market will start to push back down and go from there. If it remains within this red zone, the D extension is at 45.66, which means that we're looking at over 1,900 pips for its overall movement towards a profit zone. And currently, right now, if we're looking at this for the overall position, that means that we have less than 500 pips for our overall risk for it being able to get into that. So we're not ready to be able to place our position and say that we're ready to place it in and see what our probability is going to end up being. But we're getting close to be able to see that. The weekly is the daily is in the sell zone. We can write that. So there's a daily position that is going to end up being down, but the weekly is still up. And if we look at the weekly still being up, then that means that the position is pretty much going to end up being down. We automatically have a no right here, but let's say I'm going to say 500 pips. Going to end up risking about 4% of our account just because of where it is. Right now, we don't have enough lot size to be able to take this trade, even if we wanted to. We know that our reward will end up being 1,900 pips, which means that it's going to end up being a yes. And it's in a position to where it's at an R1, but there has not been a counter trend line break. There has not. The stochastic is overbought and oversold on the daily, but it's not oversold on the weekly, nor is it on the monthly, because the monthly is expected to go up at this particular point in time if we look at the chart. So currently right now we're at a 56% chance. I still don't like the overall risk of where we're at. I would like it to be able to go higher for our overall percent of success. I know it's more than a 50% risk. I know it's more than a 50% chance of being able to go, but currently right now, I still don't like those odds. I would like the odds to be a little bit higher to be able to go from there. So currently, the only thing that we're doing right now is just waiting for a counter trend line break or just waiting for the price to be able to hit at that 382 to kind of give us a chance to be able to get in. This is what we're looking at currently right there towards our overall movement and break of this candlestick movement. So with that being said, let's go ahead and hop into the Euro United States dollar. Now, we look at the Euro United States dollar, we can see that the market basically ended up pushing down at 1.14, and then after that end up breaking almost 700 pips towards the downside. We can see that the market long term, the swing is going to 101.3 as its overall position. But currently, as we speak, we can see that the market is moving towards a high price, and it's reacting at 109 currently at this particular point and going down. In our overall academy classes that we've done, we've actually sold this a few times. I actually ended up selling this on March 9th. I'm still in that trade. I still believe that there's 1,350 pips for a downside movement. We actually ended up taking two other trades at 1.11, and we're trying to see if the market is going to end up waving down again as we speak to be able to push down toward this zone. Currently, right now, it's going to end up giving people a high price to be able to get in, but it's still in a no trade zone and it's getting close to that oversold area. So what I will end up doing is that I will wait for this purple line to be broken toward the downside to be able to get in for its overall movement. On the 2 hour, if we're looking at this on the 2 hour just to kind of see where would that up fib be. What we could be able to do is that we can go down right here and we could take a look at the Euro USD, and some of this stuff we can go ahead and get rid of because this A was basically broken. So I'm going to get rid of that. And this, I come back to that. So we said that there was a possible trading opportunity, but that was faltered. Currently, right now, if we're looking at an overall position to be able to get in, I would say look right here. We can see that the market, the extension is at 1.10116. So it's basically at my second and third trades that we end up placing in. We can see it's in the sell zone, which means that there's a I would allow the market to be able to break or be able to hit that 382. I mean, hit that 1.618 first before actually taking a trade. But I would look for a counter trend line break to fall to be able to get in, and then allow the market to be able to go down from there. So that's all we're waiting on this one. For me, I've actually been in this trade for a while now, so I'm just going to remain patient and find high prices to be able to sell. But until then, just remaining to be patient. For somebody else that's looking to be able to get in, just remain patient. You're going to end up catching it at a high price, so you can be able to sell this long term. So going back to that, we're looking at the pound United States dollar. It's the same thing that actually ended up happening on a daily chart. Let's take a look at this and kind of get an idea about what's going on, because we can see that the weekly chart is basically in the sell position right now. We go to the daily. What we're trying to do is trying to see if we can be able to get it in a high value. As we can be able to see, the market actually ended up moving down almost 1,800 pips almost 11 days ago to be able to hit that D extension at 1.14. And since then, the market has basically rallied up. So this is just a retracement of a long-term move. It is expected that the U.S. dollar is going to end up remaining strong over the pound dollar. So we should see some downside movement. The 2-hour D extension on this one is at 1.2716, and the 786 is around 1.2882. Both of these are going to end up giving us great risk to reward for the overall trading value if our stop remains at 1.33. And as long as the market does not break above 1.33, I'm very interested in being able to sell it. So even though we can see that the daily is in the sell position, even though that the weekly is in the sell position, there's a 2-hour D extension that has not been fulfilled yet. I do expect for the market to be able to go up and at least fulfill that 2-hour D extension, which is about 92 pips away. So if you would like to be able to place in a pending order at this position, that would be something that you could be able to place in and allow the market to be able to get into that position and then look to be able to sell. If you're a little bit more on the cautious side, you'll wait, just keep your eyes on it and let it go up to that position and then be able to make a sale from there. So we have 2 trend lines that we're looking at right now. We have this first trend line that was broken. So that one is null and void anymore. So we're not going to look at that one. They're going to end up switching it up and moving it towards this. Let's see if I can move this purple line. Okay. Jeez, okay. I'm just gonna make a new one and I get rid of the old one a little bit later on. So we see that this movement happened right here. So all we're doing right now is looking at that movement right there as a break. And what will happen is it will move from this inner trend line and move toward the outer once it breaks down. So let me give you my train of thought. Market has moved up. What we're looking for is a break from this trend line. It will break. It will go back up. It will retest. Then after that, it will break towards this outer trend line. After that, once it breaks below, it will retest again and then go from there. So we're looking at 2 positions to be able to sell in. All we're trying to do is catch it at the highest point so we can be able to place in and look at compounding this trade in these positions while it's actually swinging down and going towards this long-term D extension. Now, the pound has been moving at 218 pips a day. It's actually done kind of drove off from that overall time and got a little bit slower. I think last week sometime it was really at 242 pips was overall movement. So all of the volatility is kind of done left, but it's still an opportunity to be able to sell and know that you're going to be in a high position and be patient and allow this position to be able to make passive income for you while it's actually going down. So that's one to keep in mind in this trade from now a little bit later on. Now I'm going to look at the U.S. CAD, even though I believe that there's really no position. And I'm just going to look at it from a daily perspective. But on the weekly, what we're seeing is the market 382 is about to be hit. And currently, right now, we can see that we're actually in the buy zone. It actually ended up hitting a daily 382. There's a D extension at 1.3526, which will end up being the 618 of the daily move for that overall position. As long as this market does not break this purple trend line, then I expect that we're going to end up seeing further downside movement. But will oil basically end up dwindling down and going to $14 a barrel? If we get any type of good news from the U.S. dollar tomorrow, we should see that the market will start to pop up towards the upside, and that will give you an opportunity to be able to buy. Long term, I'm looking at buying in this position. I want to buy up to 1.5831. Currently at this position where we're at right now, we can clearly see that that market is about 1,900 pips from being in that position with a stop of about 1,000. So I don't like necessarily the risk to reward, and I don't like that high amount of pips. So if I'm trading this on a 2-hour time frame, or I'm just going to let the market go down and give me a lower price and hope that the Canadian dollar is strong enough to be able to push it a little bit weaker in this position. So currently looking at that, that's just one of the last positions to be able to get in. That will be last on my positions on being able to get in. I just don't like where it is right now. So last pair that we're going to look at today is going to end up being the New Zealand dollar, United States dollar. And we just had economic news that actually ended up coming out for that one. So we're going to take a look at this from a weekly and a daily perspective. On the weekly position, what we're seeing is that the market basically ended up breaking down, hitting the D extension at 54.68. We can see that the market has basically been retracing for the last 3 weeks and starting to push up towards the 62 area. Now, the market has broken and went up to a 5.0, which means that this market is actually moving in a healthy position. But the weekly has not gotten to the sell zone. The last time that the market actually ended up getting into the sell zone for this movement, we end up having over 1,200 pips for a downside movement. So to me, I'm okay with being patient and allowing the market to be able to go up and giving us a high price so we can be able to sell down, right? Because what that does is it gives us great value. That's the thing that we're looking at for. Excuse me. That's the thing that we're looking at for is being able to get good value. Now, currently, it is at the 5.0 position, but there's really no, if we look to the left, there's really no position of pivot or this reason why the market will turn just at this price right here, just out of the blue. We can see right there, right here, and right here that at 6,200, the market was at support and then ended up breaking it. So I do expect that 6,200 will be past support, turned into a future resistance. With that being a future resistance, we can look to be able to sell right around 62.65 as a price to be able to get in, which would be the 618, and look to be able to sell down in that overall position. And that position will be at the 46.73 and 45.65 respectively for its long-term movements. So currently, right now, if we're looking at overall positions to be able to get into today, there's really no positions as we speak right now. But there is opportunity that's about to show up. When we're looking at the Australian dollar, United States dollar, and being able to sell as an opportunity, we just have to wait probably about another 100 pips. Looking at the pound United States dollar, it's a position of being able to sell. Just waiting a little bit more, allow the market to be able to go up. Same thing with the New Zealand dollar, U.S. dollar. Looking at a position of being able to go up from there. So while that's actually happening, we're just looking at the U.S. yen because gold is getting a little bit stronger. Remember, gold is expected to have its D extension at 1760, with it being 10 o'clock right now, and typically the market basically wrap it back up right around 2 o'clock a.m. Eastern Standard Time. We should see that the market will start to push up, hopefully hit this position before the European session starts, and it takes me out of my positions that I was going through long term, put that in the bank and be able to move on from there. But if you like everything that we end up talking about, we actually end up going 40 minutes today. Typically, we'll only end up doing this 30 minutes. Please make sure that you end up liking, sharing, subscribing. You're interested in being able to learn a little bit more information. Once again, please go to cartercowcapital.com/start here. Place in your information. Once you end up doing that, click on subscribe and join our session. You end up getting a pre-recorded session on what we end up doing for is ranking our trades. That kind of helps you out on being able to understand our 5-star setup checklist and going from there. Until then, we're gonna end up doing this tomorrow. We're gonna end up streaming cast and make sure that we can be able to go online and be able to do it live, probably at 9 o'clock. Until then, playing your trade your plan. Everyone, y'all end up having a good one.